Julie, great to have you on the Thrive podcast today with Dan and myself. Want to bring you guys Julie with Old Capital, who I've known for years in the industry, had great talks with, and wanted to bring her on the podcast today to really just talk about what she does and what she does for Old Capital and all that. So, Julie, before we really dive into your expertise, I like to know a little bit about you personally. Who are you? Why did you choose multifamily, and why you're at where you're at today, and most importantly, why are you in California? That's something we got to talk
Yeah.
about. That's a
Yeah,
good
that
one.
is something I should be thinking about. Yes. Not normal, right? In this industry. So yeah,
Right.
well, thank you so much for having me on. I appreciate it. And yes, I do value our friendship, and it starts there. So, and that's where I always like to start my business, is with friendships. I mean, it's all about relationships. So, I got started in this business in real estate. I actually thought about it when I was 14. I was like, I'm not paying a landlord. I want to buy my own assets. So when I was 22, I actually bought my own house in Southern California. So $250,000 deal I bought by myself. I was in the bicycle industry, actually. I used to race bicycles, and I was in the industry selling them parts and accessories. And my industry got looted by the California riots. So my business got cut off, like shut down. And at that point, I was like, what am I going to do? And there was a opening up in Northern California. I went to Northern California, bought my second house. The first house, I called up a friend and I said, can you buy my house? He says, I have $4,000. And I said, okay, I'll take that, but you need to make the payments. So he made the payments for like 12 years and then refinanced out of it. He just sold it. It's been like 35 years since then. And then bought my second house up in the Bay Area. And we ended up moving back from the Bay Area to Chicago, where I'm from. And we rented it and we doubled our money. And people said, no, it's the worst time to buy. It's the worst time to sell. We said, we're staying in it. So we had a property manager and we were running a negative. So I'm here to say that my brand is Dancing Investments, because your investments can go up and down, and it's real valid in today's market. But I lost $80,000 on my little house. I doubled my money in the Bay Area, and then we bought another asset in Chicago, and we held that for 11 years. Went through the great financial crisis. We made $50,000 over 11 years. It was terrible. So here it is. I mean, I'm living. I owned and operated assets where we've won and we've lost. And then I did that for about 15 years. And then, banks kept saying, go away, just go away. I said, I want to do this myself. And they said, well, lady, you got to take the cape off. You need to get some partners. And I fought it and fought it. We moved to California. We were in Dallas or Denver and then moved to California all the time, managing my own properties. And I said, it's time for me. My husband said, I am hanging up this tool belt because I am done with real estate. Because, we have 4 children. You know what that's like, having a big family and trying to manage your own properties. And he said, I'm done. And I said, but I'm not. I am staying in this. And at that point, we ended up selling all of our properties. I got into passive investing. I came into being a mortgage lender that I am now with Old Capital, and started to really look into being a general partner. That was my path. I didn't want to get out. I wanted to secure some capital as a passive, make sure that I understood the multifamily, why I can't grow my business enough by myself. And it validated over an 8-year period, and started to then become a not only passive, then into general partnership, where I am now with Velocity equity partners where we are buying assets. So that's my quick story about myself. And, I'm a loan officer for Old Capital, has been amazing. Just being part of a good mortgage company, and we just do some great things.
So why California? We've
Let's
got
go
to
back
know.
to that.
It's a beautiful state. It's one of the most beautiful places to live in the country.
No, to visit.
I'm sure to visit quickly.
It's a great place.
But you stayed, so we have to know
I
why.
stayed. Yeah, I'm married to a California man who loves it here. I mean, we are very, very active people. We bike, we hike, we walk along the beach on a regular basis. We are just active, and this state supports that. We used to do a lot of camping, but I got to tell you, it is rough. It's rough to live in this state. No doubt. It is gorgeous and it offers us all of that.
But you're paying for it.
I'm paying for it. And it's on a daily basis. It's like a brick on my head all the time. I do a lot of traveling out of the state, so I can get opportunities. It's expensive. It's expensive to travel places. I get to come home. It's a beautiful day today. We've got high winds. We've got high surf if you're into surfing. That renews my soul, but at the end of the day, I have to get on a plane to get out of the state to run my business.
Well, don't come to Texas. We're getting come to Texas, just not next week. We're gonna be really cold, and we're gonna come hang out with you. I think
we're in the single digits next week, and that's I guess it's better than August when you're in the triple digits, but anyway. So.
Yeah.
And you're in Southern California today,
I am. I'm
correct?
in San Diego County. Yeah.
San Diego.
Yep.
Very cool. Well, would you invest in California?
I would not invest in California. I invested in California. And here's the thing. I've invested 3 times in California, and every time I walked away with a pile of money.
Okay.
And for that, I like it. But during that, I would do renovations and it would be on me. It would come out of my own pocket. It didn't come from cash flow. So, you have to think for each individual investor, what's the deployment of capital? When do you want to turn it? If you want to hold on to the asset and then get a pile of money, great. If you want cash flow, it's not here. It's not here for a long period of time. So I was able to fix and flip my assets, and I didn't flip them. I held on to them till they made money, and then I made a ton of money. So, the fix and flip model in California, it's stressful. It's you don't make that much money, in my opinion. So it is fix it and then hold it. Was my model. And it was like we ran negative on our properties in Northern California, like $90 a month. And so I didn't do any renovations on that property. But I did it. The cash flow in Chicago was amazing. I could live off of it. It was fantastic, but the appreciation was horrible. So, when you buy here, you're like, oh, I'm going to get it. And then you go to, Texas, you get the cash flow, but not as much, historically it wasn't as much when I was running my business on the, smaller. We got up to a 20-unit building and, managed it ourselves. So you got to keep your eyes on it. It worked well for me. It worked really well. I was a mom for a long time with 4 kids. We really poured our hearts and soul into our family. And then I managed and operated, did all of the tenant leasing and all of that. So I have a great skill for that a lot of mortgage brokers, lenders, they don't have it. They come out of college, they know how to underwrite, and they do all that. I come with a completely different skill set, and for me it's like you've got a track record, you know how to run these deals, you know what to be looking for. I mean, a lot of these folks that we work with, they just, come from a program, and I can really add so much value. Hey, did you look at this? Did you look at this? Just very, very different.
Well, on two different fronts, right? So it depends on what your investment thesis is, right? That you want to invest in. If you don't need the cash flow and you want to park cash somewhere and make some money, that's a great thing. Or if you need the cash flow, if you're, I'll say, later in your years and you plan on using that cash flow to retire, that's going to be important. So that's going to be really good. Where do you see the best markets to invest in? I'm going to say in multifamily, since that's the majority of our audience here.
Yeah.
In multifamily, where are you seeing some of that be the best kind of opportunities?
Yeah.
I know Sunbelt's big, but specifically, are you seeing specific markets to be?
Well, I would tell you the trend now is to look in the Midwest. There hasn't been a whole bunch of new construction that is impacting. We're still seeing the rent growth at 4%. We've seen a big dip in Texas. We've seen a big dip in Atlanta. We've seen it in Phoenix. We've seen it in Boise. I still am bullish on Texas. I have a lot of assets there, so I got to be bullish there. I still think the fundamentals are there. I think it's just going to be a little bit of time before we absorb that new construction. A lot of people got into ground up construction because they were trying so hard to get into multifamily, and they couldn't get a deal done. So they shifted, educated themselves, and did the development. Now, on a lender side, the development piece really hit hard times in 22 just because the banks pulled back. So a lot of it got shut down, which will be an advantage for us from a absorption position, but we need housing. So I think Midwest I'm bullish on. I do think there's opportunities in North and South Carolina if you're there and you have boots on the ground. I like Iowa, which is Midwest. I like Omaha, Nebraska. I do think that Miami was the #1 market last year, and it's starting to kind of trickle down because there's been so much growth. But I think that can be strong. The problem with Florida, like it is, Texas, is the insurance. So that has impacted a lot of the lending, obviously, impacting the deals themselves. So
we had a insurance guy in a while back, and he was talking about the added costs of hurricane insurance and all of that in Florida. We don't have that problem, I guess, as much in Texas, but
it's down south around Galveston, Corpus Christi, in that area that it's gone higher, but it just seems ridiculous here in Texas what it's done. So that's pretty interesting.
I am happy. I mean, I own a deal in Houston, which has gone through a lot of construction. They've got a lot of new projects down there, development, and we were really concerned about our insurance. There were other properties that were getting double this year in insurance, and November 1st is a big deal. I think it's November 1st, or is it November 30th? Anyway, November is when hurricane season is over. So our renewal was the end of December, and I even had someone on Zoom at 8, like an insurance guy, who said, no, insurance is going to go down once we get through hurricane season. So our other comps in the area in Houston were getting double, and it was before November. So we were budgeting, pretty high, but ours only went up to $2,000. So we were pretty happy. In that market, there's only like 6 insurance companies that are underwriting these deals.
How far away are you from floodplain there? Are you in floodplain?
No, we're not. Actually, our property sits up a little higher. We're we're by a hospital. So when you guys had ice storms, we never lost
Yeah.
electricity. We never flooded. And
You're on
when
the
there
same
was a
grid.
hurricane,
That's
we
awesome.
never,
Yeah.
yes. So okay, listen, it's been a struggle. We have a bridge loan, as everybody has heard, right? And it is, we're fighting everything we can to keep the deal going. So
Well, with your experience in property management and whatnot, you're one of the best in the industry to have the knowledge and to be on the forefront and the front side of it. So good for you. I'm sure you're getting more involved than you thought you would be in the initial stages of when you did this deal. But in the end, I think, having you on the team is a huge advantage. So kudos to you for that.
Yeah, thank you.
Hey, so Old Capital, let's talk about that. Let's talk about Old Capital and who they are. I mean, I know who Old Capital is. Obviously, Dan knows who Old Capital is, but who is Old Capital and what do they do and what size deals do they do and all that good stuff.
Yeah, so Old Capital is a mortgage broker. We call ourselves a mortgage bankers as well. We are a group of 8 or 10 people, I can't remember, it kind of comes and goes, who have been in business. We've been doing loans for 38 years. We started in Dallas. So since that time, we have closed 7,000 loans, which is a ton of loans. We typically do 1.2 billion a year in loans. With a volume of that, we're doing a lot. Each of us are doing a lot. Now, with that, we have relationships in the state of Texas where, people know we've been here a long time and we will close. So the value that we are bringing is the relationship we have with a broker. Brokers want to close, they want to be paid, right? And so when they know Old Capital is involved, we get, hey, let's get them to the top of the best and final, right? It's going to help them shine. That's the advantage of, doing business in Texas. But those Texas people are looking outside of the great state of Texas. So we have expanded. Our intention was to be nationwide, but I came on board, and obviously I'm not in the state of Texas, but I go nationwide. So again, I'm not up and down the West Coast. I really focus more moving east. I mean, I've done stuff in New York, Ohio, Florida, Atlanta. So my business not only is in Texas, but other states, which has been very helpful to build our brand in other states.
Are you the only one that does that goes nationwide, that does outside of Texas?
I would say this, the people that are in Texas that we're already currently doing business will, our originators will go to others, but I really focus on the new investor. I help people from zero, educate them. And now listen, we're building a relationship. We want their first up to their 15th deal, right? And that's kind of how I did it in the bike industry. I was in the paper industry, and now I'm here where I'm building a relationship, educating you. And listen, I'm going to give you my business. That's really how my brand works. So,
and 100% of the deals you're closing, are they all multifamily, or are you guys doing anything else?
That's a great question. No, we will do about 90% of our business is in multifamily. So we are specialists in multifamily, but we're doing multi-use, we're doing mobile home park, storage, retail, assisted living, BTR. That is, we will do all of it, because why? We're brokers. We have a network of banks that we've done business with. And so we can go to each one that, makes sense for our client. We do a lot with agency, right? So agency is multifamily provider of debt. So
I don't know if you track this or can track this. Is there a track record of when someone uses Old Capital as their broker versus not using a broker and trying to go directly or something like that? Is there a tracking that y'all do for that? saying you have a higher probability with the relationships that we have with the lenders to close?
Yeah, I mean, I think the biggest track record is that of 3 deals in Texas, Old Capital closes one of those. So we have the
Okay.
volume to say, hey,
That's a lot.
we're doing a lot of business, and we've actually closed on the same asset, 5 and 6 times.
Wow.
So it's a valuable relationship that we have with the sellers, with the brokers, with the banks. So it's a real cohesive strategy that we have to make sure. And the thing about Old Capital is we are educating not only on the Zoom at 8, but we are running the Old Capital Conference, where it is a place for people to come to meet all of the necessary Rolodex. Those relationships are built at that Old Capital Conference. And it's just chock full of information. What I love about Old Capital, working with Old Capital, is we tell the truth. Where's the market? What's happening? We're not going to be an education program that's going to be trying to sell you a program to pay us $30,000. We really are advocating for the buyers so that they are educated in where the debt is going to end up and how it influences your pricing, right? A lot of challenge right now is equity. And so we are running a bus tour for just passive investors. Well, passive investors are not necessarily going to give us the loan, but they're going to recognize that, hey, Old Capital helped me understand why I should passively invest into a multifamily deal. That's what
That's
that's what's so special, I should say, about Old
Yeah, I
Capital.
would say, have y'all done that always, or is that a new thing that you're
Brand
doing?
new.
Yeah. So,
Yeah.
there's some syndication groups out there that really focus on the passive investors and do a pretty good job of that. And it seems to be that's where you see a lot of passive investors leaning to, because they feel like their money is secured. And it's basically an education program for the passive investor. And you taking that on, as y'all's burden, being able to educate the passive investor that multifamily is still a good business to invest in. You have to find the right, syndicator, or the right lead, or the right
Operator.
you name it, whatever, or the GP team, right? So you have to find the right one. So there is good deals out there. We see good deals. In fact, Old Capital, as you just said, 1 out of 3 we help close. So we see a lot of deals, and we see a lot of bad deals that we may not even choose to do because they're a bad deal, and we don't think that they'll get across the closing table. So you're seeing the good, the bad, the ugly, and you're helping those people.
Yeah, and Dex, and on that piece, we are consultants. So we know, especially in Dallas and some of the other submarkets, not submarkets, but other MSAs, we've been there so long, we know that area. We can say, you know what, maybe steer you something else. Not saying don't buy it, but there might be something better, or that we would recommend not doing that deal. We know some of the challenges that the other folks have had. So
so are you getting calls from people saying, hey, I'm looking at investing in this deal as a passive? Do you think it's a good deal, and you help them? Maybe not, or maybe so.
Yeah, I mean, I want to ask the questions, right? And I want to steer them to ask the questions. Have you thought about this? Where are you at with that? I don't want to. That's not my platform, is to shun anybody. This is your decision, but making sure that they vet the underwriting, the property manager, the operator, the experience of the operator. What is the business plan? All of that is very critical to an investor, and we're going to have those conversations. I mean, again, another thing that I do, which is very different than the other originators, is that I build relationships with sponsors. If I get a new person who doesn't have a sponsor, I will I will marry them together. So now Old Capital has made that relationship, and it just secures the debt piece as well.
For sure.
Yeah, I just think that's great. And then the other thing is, my partner and I, we will also manage, we'll come in as the general partner for, new investors who don't have a sponsor. We can sponsor the deal. My partner is a property manager of 45 years. So she is ingrained in this business. She's a professional. She knows what she's doing. So who better to have a debt provider, a property manager, and we capital raise. So our last deal, we capital raised $6 million. So we have that vehicle that will help the new operators. If there's a good deal, we want to participate as well.
Yeah. So we talked about it a little bit off camera, but obviously we know there's the industry's struggled a little bit over the past number of months and whatnot. Rates have been what they are, but obviously we know rates are dropping. There's scheduled rate drops over the next number of months. So we've seen on our end like an increase in movement in the industry. Wanted to see what have you seen and what do you think is going to happen here over the next number of months?
Yeah, I mean, listen, that drop in rates right before Christmas elevated so many operators. I mean, not only from the new buyers, but the operators that are in these deals. It gave us a twinkling of hope that, the Fed funds, the SOFR we'll see light at the end of the tunnel. So that really boosted a lot of excitement in the market. I would tell you that usually my December is quiet, but when those rates dropped after the Fed meeting, it was crazy business all through Christmas. I've been busy up until yesterday. No, just kidding. It's been busy because everybody's excited. There's new people getting into this. We did see a rate increase today of Freddie, but they just do that because they've got so much business. When it dropped, people are like, yes, let's close this. Let's lock this loan. So when they get a little bit full, they'll raise it just to kind of slow down their numbers, their inventory of money that's, they have to deploy. But I would say, things are looking up, right? I think that as an investor, myself as a limited partner, there are these operators they're looking at it daily of how they can improve, whether it's operationally, whether it's, raising the rent or even just keeping the people in the units. How do we do that? So I think it's made a lot of people smarter, really digging down, because for a while there, as it was a flurry of money coming in, buying and selling, and it was crazy. So let's dial it back a little bit. Let's really get our operations set so that the next phase of this business can go in well. I mean, I think one of the things that I am seeing, you guys, and I think this is going to be a great benefit to you, is that in this flurry, everybody was trying to raise rents, but that capital wasn't being put back into the assets. So I think there's going to be a lot of calls for you guys to say, hey, I'm going to need some of this capital improvements to be done now, because the new buyer is saying, I'm not paying for that.
Yeah.
That needs to be fixed.
We've talked about that with several folks in here, as far as operationally, people not picking up new assets as much as, over the past year as they were in the past. They kind of focused on operational a little bit more and saw improvements there. That's why I think it's really interesting. You have partnerships with property management. That's been the big lacking area, I think, that the industry's seen. So,
Well,
good
on
property
that,
management.
yeah, on that note, Dan, I would say we don't pay our property managers enough, number one. And I think that there needs to be a leveling up of the folks that are working, that the
Expectations. Yeah.
expectations. Yeah. Because, I know for several of the property management companies that we work with, they're just trying to hold on to the best people. And there has to be a plan to keep these really good employees. And whether it's money or it's profit sharing or something, there's got to be some way to keep the good ones. They really make a difference for ownership groups.
I agree that property managers, a lot of times they throw bodies in there just to have another body in there to say, oh, well, we have this many people on site. And I don't think the intent, and I want to be clear about this, I don't think the intent of a lot of these property management companies is unethical.
No.
I think their intent is to try to satisfy what the property wants. And they're behind the eight ball on being able to get people in the door that they just take anybody. And it leads them to mistakes because they can't oversee all the mistakes. And so it becomes this snowball effect that they have to constantly rotate. Well, your manager's bad. Well, is she bad or was she not trained right because you haven't been able to spend the time with them, or he or she, right?
Sure.
And it goes all the way down to the maintenance guys, right? So I was working with a maintenance guy at a property last week, I think it was, maybe the week before, I can't remember. And he, didn't know some basic plumbing things that I think a maintenance guy should know. And so I'm there with my team. One of my project managers, he's sweating in pipes just so we can get this job done and get it turned over so the renter can move in, and helping the maintenance guy. And then so we asked questions the next day going, hey, we're just trying to help get you through this. And they're like, yeah, we have one maintenance guy for 3 properties. We just can't find enough people to come in with any expertise. And we're like, so what did he do before this? Well, he was a groundskeeper. And you're like, that explains a lot, right? And so, and it's not because they're just ill will. I don't believe people genuinely do things out of spite. I think they genuinely do things out of necessity. And I think property management gets a bad name a lot of times because they're behind the eight ball.
Well, and here's the thing. I think, and we don't have to harp on this, but there are operators that have gone through, let's say, elementary school in multifamily, right?
Yeah.
They haven't been given the skills. What are the expectations of a property manager? You think they can do all of this in a short amount of time. It's not that way. So, and you have the bank that's saying, you got to improve this. You got to improve this now, or I'm putting you on a checklist, which you don't want to be on. So
there's a lot of syndication groups that focus very heavily on how to acquire assets, but maybe not as much how to operate assets.
Absolutely, 100% agree with you.
Yeah. Well, hey, so we've talked about a lot of this, and you've mentioned Zoom at 8 a couple of times. Let's talk about it. Let's talk about what it is and what your goal is with your Zoom at 8.
Yeah. So I came up with Zoom at 8 out of a reaction to a education program that didn't have an ecosystem. And by ecosystem, I'm saying limited partners, sponsors, people that are general partners. So they didn't have that. And so I saw, hey, this model works really well having an ecosystem. I'm going to create this ecosystem for the deals of this education program. And so all of those people funneled into this weekly Zoom at 8. And it started almost 5 years ago. And we had industry experts to come and help these new investors. But I pulled in sponsors, I pulled in insurance, I pulled in property managers so that this ecosystem could feed all of these people coming out of this education program. It's been amazing. We meet every Tuesday at 8 o'clock Eastern. So if you're in Dallas, it's 7. And it's 3 weeks out of the month. I have these industry experts come in and talk about, SEC filings, some challenges, new investors who just got their first deal and how that was. We've had Ken McElroy, we've had Peter Linneman, we've had some big names, but I also want to make sure that it's localized to what is the new investor? What's that experience? How does somebody go, and what does that look like? What is the expectations? So it's been wildly successful, and people can join us. Just sign up at www.dancinginvestments.com. Dancing Investments. Why? Because as I experienced and many investors experience, it's not a straight line. Our investments dance. And if you've ever seen me on social media, I do like to dance. So it was a good mix.
Well, I'm glad you mentioned that, because I was going to ask, I've come into a lot of potential investors that want to know, hey, where do I start? Where should I look? Where should I get information from? So it sounds like, if they come onto your podcast or your Zoom, it would be a real good place to start.
Yeah, it is. It's great. You build relationships there, you learn. And, you had asked, what is the advantage for me? It's where I build my business. I build my brand at Zoom at 8. People know me. I have shirts, T-shirts. People, can I get a T-shirt? I mean, it's kind of a cult following.
That's what I was going to say. It is kind of a cult following in there.
Yeah, it's been great. Listen, if you think about real estate on the mortgage side of things, on the debt side of things, you see men, you see young men, you see old men, you see them in suits, usually blue suits. There's not a lot of women. So I bring a very different touch to the finance side of things. And I think it's refreshing. I think people are accepting that, women are in this industry. I mean, over the last 8 years that I've been doing mortgages, it's just exploded. So a lot of opportunities for women.
Now you have the conferences that are focused on women investing. So it's you've got a lot of things happening. I think are new in this industry. Kind of cool.
Yeah, that's why they call me the first lady of lending.
Oh, see, it all comes full circle now. We learn it all.
Well, it's been awesome having you on here. We appreciate you coming on with us and sharing your story. So anything else?
We'll put your contact information, how to get in touch with you, and that'll go in here. And then if you guys want to talk to Julie, reach out to her, sign up for her Zoom at 8. But I will tell you, from the time I've known her, she is a wealth of knowledge in all areas, and just a dynamite person.
And she's fun to hang out with.
She's a fun person.
We have a little bit of fun, don't we?
Yeah, a little bit of fun. So,
well, thank you.
Highly
guys.
recommend.
I so appreciate it.
No, thank you for your time today as well. So, appreciate it, and look forward to talking to you soon.
Thank you. Take care.